Hey everyone, welcome back to SKRS, where we break down the biggest economic stories affecting your wallet and investments. This is part of our Culture, Values, and Responsibilities playlist. Today, we're diving deep into the escalating tariff war 2025 between President Trump and China. Is the stock market on the edge of a crash, or is this just another volatile blip? We fact-checked the latest news as of October 13, 2025, and I'll explain the current situation, its massive impacts, and what it means for you. If you're invested in stocks, crypto, or just concerned about rising prices, hit that like button and subscribe for more insights. Let's get into it. The current situation. First, let's set the stage. Back in early 2025, after Trump's re-election, tariffs on Chinese imports were already at around 30 to 40% from previous escalations. But things heated up big time on October 10, 2025, when Trump announced an additional 100% tariff on all Chinese goods, effective November 1st or sooner if China made more, aggressive moves. This came after China imposed export curbs on rare earth minerals, critical for tech and electric vehicles, accusing the U.S. of, double standards. Trump called it a response to China's, hostile trade actions, including export controls on software and critical tech. China fired back, vowing, resolute countermeasures and refusing to back down. By October 12, Trump softened his tone on Truth Social, saying, "Don't worry about China, it will all be fine," and calling President Xi a, "highly respected leader who just had a, bad moment." He emphasized the U.S. wants to help China, not hurt it. As of today, October 13, markets are rebounding. The Dow jumped 600 points, S&P 500 and Nasdaq soared after Friday's rout. But tensions remain high. Total duties could hit 130 to 145%, nearly an embargo. A planned Trump-Xi meeting is still on, but no de-escalation yet. This is the latest chapter in a trade war that's cost trillions and disrupted global supply chains. IMPACTS on the stock market. Now the big question, is the stock market crashing? On Friday, October 10, Trump's tariff threat wiped out $2 trillion from U.S. stocks in a single day, the worst drop since April. The Dow fell nearly 900 points, that's 1.9%. The S&P 500 dropped 2.7%. The Nasdaq plunged 3.6%. Crypto wasn't spared. Bitcoin crashed 18% to $101,000 with $19 to $20 billion in liquidations, the largest ever. China's markets paired losses but still dipped, with the CSI 300 down 1.3% and Hang Seng down 2%. Globally, Asia and Europe felt the shockwaves. Why? Tariffs raise costs for companies reliant on Chinese manufacturing, like Apple, which has 90% of its production in China, Nike, and semiconductor companies. Analysts from Goldman Sachs say U.S. consumers could pay 55% of the costs through higher prices. Bank of America warns tariffs could cut 2025 S&P 500 earnings by 10%. But Monday's rebound, Dow up 600 points, shows markets betting on de-escalation. Still, volatility is here to stay. The IMF estimates renewed trade wars could shave 0.5% off global GDP. If tariffs stick, expect more swings, potential recession signals, and a shift to safe havens like gold, which jumped amid the chaos. Broader economic and global IMPACTS. Beyond stocks, this tariff war hits everyone. For U.S. consumers, expect prices to rise $4,600 per family annually on goods like electronics, clothes, and cars. Retailers are bracing. Tariffs could wipe out 80% of Nike's 2027 earnings or force 8 to 11% price hikes. Farmers, U.S. soybean sales to China dropped 51% year-to-date. That's a $2.6 billion loss, with China turning to Brazil and Argentina. On jobs, tariffs protect some U.S. manufacturing but destroy others, think export-dependent sectors. Fitch calls the 22% average U.S. tariff a, game changer, pushing us back to 1910 levels. Inflation could spike 1 to 1.5% according to J.P. Morgan, delaying Fed rate cuts to 2026, says Morgan Stanley. Globally, the EU and Canada are planning countermeasures, slowing world growth to 3%. China's economy, they're diversifying exports, but stocks fell 4.8% initially. Long-term, this could accelerate, quote, decoupling, boosting alternatives like Vietnam or Mexico for supply chains. But there are no winners in a full-blown war. Studies show Trump's past tariffs cost U.S. households significantly and led to bailouts. What HAPPNS next and advice? So crash or edge? Right now, it's on edge. Rebounds show hope for talks, but November 1st looms large. If there's no deal, recession risks rise. If resolved, markets could surge. Watch for the Trump-Xi summit and Federal Reserve moves. My advice: diversify your portfolio, gold, bonds, stocks not exposed to China. Avoid knee-jerk trades, focus on long-term investing. What do you think? Is a crash incoming, or is this a buying opportunity? Drop your thoughts in the comments below. Thanks for watching SKRS. If you found this helpful, smash that like button, share this video with friends who need to know about this, and subscribe to the channel. Turn on notifications so you never miss our next update on the economy and markets. This is part of our Culture, Values, and Responsibilities playlist, where we help you make informed decisions. See you in the next video. Stay informed, stay prepared, and remember, knowledge is your best investment. Thanks again, and I'll catch you next time.